Okay, so KFMA data from North Central Kansas, and I'll just do this in phases. This was the 2000 to about 2007 period where we were break even or losing a little bit for the average farm on those crop enterprises. And that was sort of normal times. We were getting by and managing it. And with the average farm kind of breaking even or just being slightly under, that meant that we still had some farms that were doing really well, but we had some farms that weren't doing as well because these are averages. Now then we kick into the 2008 through about 2014 period, and everybody's making money, right? Everybody's making money. And what do farmers spend their money on when they're making money? Land and equipment, right? And I had one gentleman try to tell me that he spent it on his wife, and I called bullshit, right? But we did. We were making money, and so we were bidding up the price of land, whether it meant buying it or renting it. And we saw, I'll show you some charts later on with rental rates from USDA, and USDA rental rates are going up during this period, okay? Right? That's even with survey data and USDA's got, there's some interesting things about how they collect that data, and we'll talk about that later. But we didn't go back to the break even, losing a little bit. We've dropped into losing a lot, losing 50 bucks an acre, and it happened overnight. Now I know you guys know all this, but I put these numbers up here just to demonstrate that there's a problem, there's a cash flow problem that we've been dealing with for several years in a row, and we're waiting for it to break. Now, what I'll show you is the last 2 years, things look a little bit better. But why is that? Is it because commodity prices have recovered? Is it because profitability in the sector is good? It's government payments. Okay. So net farm income per operator, the green is the cropland side, the blue is the cow-calf operator. The last 2 years, we've been coming in an average somewhere around, around 90,000, to 100 on the crop side, and it looks pretty good if you just look at this chart. This is the variability across the regions of the state. You can see there's a lot of variability. What drives the variability in profits across the state? Well, we're all facing similar, we've got basis variability, but what's probably the biggest driver of whether or not you're profitable is your yields, right? And so we've got yield variability showing up here in some of that income per operator. This is the chart I wanted to show you. This is the chart that shows you, it's that same total net farm income number. So it goes really low in 2015, 2014 was our last good year. It goes really low and then it starts to build back up. But what's building is that blue base of government payments. And what I also wanted to show you was the big red dot for the MFP payments as a proportion of total government payments. Okay, so we're not making government payments are not coming in from ARC and PLC as much as it is MFP. An MFP is just a stopgap. It's an ad hoc payment that has come in over the last 2 years. Now we're getting another round of those, ad hoc payments in 2020. What happens in 2021? How important are these government payments to your clients? Hugely, right? Okay, so this is the key to it, is that we can look at net farm income numbers and they don't look that bad, but the reality is that government payments are supporting a lot of that. Now this is the distribution of profitability across our farms. So we show you in here that we've got some farms in the, over 200,000. Let me see if I can do there we go. So on this tail out here, these guys are doing well. There's probably about 20% of the farm, 25% of the farms that are doing okay. There's a big chunk of them that are coming in at ranges from net farm income that are doing so-so, and then we've got 18% of the farms that are less than zero. Net farm income is negative. Now that's a little bit improved because in 2018, that was 21% of farms. So we've improved a little bit. But total, let's go back here. 18% of farms are less than are losses. If I take in the 0 to 50,000, which is my tallest group here, that's more like around 40% of my farms that are making less than 50K. This is farm family living expenses. In 2019, they totaled about $73,000, right? So we might be making a positive net farm income. Oh, we got a question.
We do on here. For the last 150 years, the average land appreciation rate was about 3.5% yearly. Is this a valid prediction for the next 50 years?
Can we hold on to that?
Okay.
And in 50 years, I won't be here. I am 44, right? So I don't know. So I'll give you a prediction for 50 years out, but I'm not sure how good it's going to be. But I've got a chart at the end of the presentation that shows since the 1960s. And so we'll take a look at that and then we'll talk longer term. Okay, so that's a good question. So not covering farm family living expenses necessarily. What does that mean? What are your customers doing if they're having trouble covering farm family living expenses? Going into debt or off-farm income, right? So sending the spouse into town. What is the most important thing that you can get on an off-farm job other than a paycheck? Insurance. That's our next presentation, right? Yeah, that's pretty important. That is the category that's been raising the fastest over the last several years and is causing some problems in terms of covering family living expenses. I track bankruptcies just to sort of be aware. We know that bankruptcies don't happen, after 1 or 2 bad years. So they're not a leading indicator of farm financial stress, they're a lagging indicator. But we keep track of these to show you that they have been increasing over the last few years. And when you put it in perspective, it's hard to read this, but this goes back to 1987. Okay, that was 1987 on the far left of your chart. Our numbers are comparable to what they were in the 90s. So we had a run where we weren't doing a lot of bankruptcies for quite a while, and they were very low during the boom period, but they have started to tick back up. Okay, let's talk rental rates. Returns to farming, so we've been talking about that. By the way, why do I talk about net farm income before I talk about land values? Who buys farmland? Farmers, right? Even though the farmers are convinced when I go to northern Riley County and I give a presentation, the farmers sit around the room and they say, well, it's Jordy Nelson. That's who's buying the land, right? It's non-farm money, it's the NFL. Well, okay, maybe. But really, who's driving the farmland market is farmers. And so we need to know their financial position if we're going to understand or make any predictions about where farmland is going. Okay, so how have we adjusted to this new level of profitability? We've reduced machinery turnover, we've maybe reduced some use of certain inputs, and we've tried to negotiate for lower rents. How does that go? How does it go when your farmer comes into the office and you tell them you need to negotiate for a lower rent? What do they say to you? I'll try. It's hard, isn't it? It's hard to negotiate lower rents with the landlords. Why is it hard? Well, what is the landlord going to say when you come to them? And I'll describe what I'll call I'll call it the typical landlord-tenant relationship. We meet once or twice a year. We talk over coffee. We talk about the kids. We talk about everything under the sun until the very last 5 minutes of the conversation. Then we say, do you kind of like where we're at? Yeah, I kind of like where we're at. Should we stay there? Yeah, let's stay there. Okay. Right? So to come in and say, hey, we need to drop the rent, the landlord's going to say, well, why? And there is, I spent a lot of time preaching about, and I call it preaching because that's what it feels like. It feels like I'm talking to my kids, right? to farmers about your landlord-tenant relationship and what you're doing there and how you're talking to them and what kind of information you're sharing with them. Because when it comes to a period of time like the one that we're in, you need to be able to share information with them so that you can justify a request for a lower rent or for making adjustments. Okay, so these rents, USDA is very conservative in estimating rental rates, okay? And one of the reasons that they're that conservative in the numbers that come out, the blue line right now is non-irrigated cropland, so that's the one I want to focus on. This goes back to 2007, so I wanted to show you the increase from about $40 an acre average for the state up to about just shy of $60 an acre for the state. That was the big run up in rental rates. It doesn't seem like we've heard stories about rental rates going much higher, right? And as a proportion of the base rent. When let's see, 2011, I think it was the first year that I tried a little bit of an experiment where I took budgets and estimates of yields for the region, and I looked at basis adjusted futures prices, and I said, if we run this through a budget scenario, and we figure out how much you can afford to pay for ground, and assume that if you pay for your machinery and you pay some labor and management, that the residual, the profitability, is what you're going to share with your landlord, how much can you afford to pay for ground? And it was 2011, and I was in Scott County. I said, boy, it looks like you guys can afford to pay 75 or 80 bucks an acre. And USDA said they were paying 45 or 50. And what do you think the reaction was? I got some dirty looks from my group of farmers, right? And I said, is this true? Can you guys really afford to pay that much money? And they didn't say anything. They were as quiet as you were. But afterwards, when we were drinking coffee, they kind of slide up to you, real quietly say, yeah, we're bidding high on ground. And we're bidding that much, if not a little more on good ground, because we have to be that aggressive, because the profitability was there. How do you bring those rental rates back down? We had a meeting, I'm gonna run out of time, but we had a meeting about 3 years ago where the theme that I wanted to put for advertising the meeting was, how long can you afford to lose money on rented ground? But we figured nobody would show up, okay? We've lost money on rented ground over the last few years because of rents that we negotiated and held on to. This is rental rates. So I guess what I want to say is they've come down a little bit. USDA doesn't like to come down in their estimates very much, but we have come down to a statewide average of $56 an acre. This is reflective of the fact that we've backed off a little bit in rental rates. It's happening here or there. In some cases it's negotiated, in some cases it's forced, right? Where somebody ends up having to walk away from a piece of ground and that ends up negotiating the rate lower. Because it is not necessarily true that the guy down the road can afford to pay more. These are maps, they're really hard to see, but they're on Ag Manager. They come out every 2 years where they give a county average rental rate. These rental rates tend to be very conservative. They are based off of surveys where USDA NAS sends a survey to a farmer, and the farmer's job is to look at, in the survey is to say, how much have I been paying for rented land? What's the total amount I paid for it? What's the total number of acres that I paid rent on? So what does that do? That gives you an average, and that average smooths over all of the quality differences in the land that we rent. Because we know not every piece of ground rents for the same amount. So we get this sort of smoothed average number, but you can see the variability across the state. And it's a piece of information, right? For county agents, what's the #1 question that you get? How much should my ground rent for? And you get it from landowners, don't you? Yeah, from landowners. And they want to know, so this is a piece of information that we can provide. Here it is for pasture. And I guess what I'll say when it comes to rental rates is we're going to keep watching them, but when I do that same calculation where, you know, I had a 50% increase in rental rates in Scott County in 2011. That same exercise says I can't really afford to pay for rent right now if I pay myself for my machinery and I pay for myself for my labor and my management. So what are we doing? We're paying rent either out of our labor and management returns, or we're taking ground that we own and subsidizing ground that we're renting and not making as much off the owned ground.
Michael.
Yeah.
Doug Bounds just noted here that the 2020 maps are now available.
Oh,
so they
sweet.
do have them for 2020.
That's great. Thank you, Doug. So we have 2020 maps. We need to get those up on Ag Manager then.
We do.
All right. We'll do that. So we do have some updated information there. I guess what I'll say is, who can subsidize rented ground payments with owned ground? Speak up a little. Older farmers, right? Because who rents most of their ground? Younger farmers who are just getting started. So who's very vulnerable in the economic conditions that we're in right now? The young farmers, right? Okay, land value trends. Again, I'm going to show you some numbers from USDA because I think that they're really helpful on getting a large sense of the trends, and then I'll show you some trends from transactions data. So Kansas Ag Stat Survey, we have a state value for irrigated, non-irrigated, and pasture land. And they put that out every year, and I did update these, Doug, so thank you. These are from 2020, and they're showing a 3.7% drop in the statewide land value from 19 to 20. Okay, so this survey, I hope I'm getting this correct. This survey is sent out, and you're asked to say what the value of land is on January 1 of 2020. So it's sent out, though, I believe in June. And you are asked to look back and say what was land value in January, okay? So there's a little bit of a lag on these land value estimates relative to where we stand today in September. But they're saying the 2020 numbers are down 3%. Pasture is down 1.4%. Did I read that correctly?
Yes.
Okay. So a little bit of softening in our land values for Kansas. Here's the trends over time. You can see we peaked in about 2013, 2014, and then we started to come back down. We recovered a little, and then we adjusted back down. What's driving these land values? Why are they not, if profitability was so poor, and farmers are our main buyers of land, then what supported land values? We just talked about it earlier. Those government payments, right? So we start to question, I didn't think after one round of MFP in 2018 that was going to have an impact on the farmland market because it was just one shot. It was a one-shot deal. We're like, don't count on it ever coming again, right? And then 2019 rolls around and we get another shot. We say, don't count on it ever happening again. And then 2020 comes, and I'm not saying that the money isn't well placed, but how many one-shot deals can we get? And what do you do with that when land is a long-term purchase? You're purchasing it based off of long-term profitability. But we've got money infused from those government payments. Okay, here's rent to value. It got pushed down during this period on farmland. Rent to value was about 2.8%. Okay, so we follow that ratio as well. So let's talk about market-based land values. I get them from the Property Valuation Department in Topeka, and I'm going to show you first the sales data from 2015 through 2019. Oh, I just sped through that. Okay, so we know lots of things about this land. Why is it important to know things like where it's located, acres in the sale, the mix of irrigated, non-irrigated, 20-year average rainfall, whether it's enrolled in CRP? Why do I need to know all those things about a piece of land when I look at its sale price? Sure, it affects the value, right? Every piece of ground that sells. When you hear about a piece of ground that sold at auction, and it sold for really high or really low or whatever, you got to ask yourself, what were the factors driving that sale? And some of the ones that we can measure are the ones that are specific to the land. What can I not measure about a piece of ground that sells on things that affect its price? Say it again. Neighbors. Two neighbors who don't like each other. And you don't want to see the other one get the piece of ground, right? So I can measure some stuff. There's some things I can't measure. But we try to explain as much of this as we can. We remove the value of improvements for a bare land value, and parcels under 40 acres are omitted just to keep it as a ag use, not ground that could easily be converted to non-ag use. And this is what I want to show you is the number of transactions. In 2015, we averaged between 3,000 and 3,500 transactions that we use in this model. That doesn't mean that, like I said, it drops all the sales transactions that are 40 acres or less. It drops non-arm's length sales. So there's more transactions in this that occur in the state, but these are the ones that we use for this analysis. What strikes you about 2016? Fewer transactions. Why would 2016 see fewer transactions? 2015 was the first real year, I think, of starting to feel like, hey, maybe this, is real. And then 2016 happens, and you have a lot of folks who put their ground up for sale, whether it was by auction or with a realtor, and the prices that we were getting for ground all of a sudden were not coming. And if they didn't have to sell, they didn't. And so I can't observe ground that gets put up for sale and doesn't sell. It's just missing from my data. So that's one of the explanations that we heard a lot of no sales, a lot of ground that went up for sale and just didn't sell, didn't move. But it's recovered. So we're back up around 3,000 observations. What I'll show you is when I estimate the state level land value based off of those market transactions. The peak was in 2015. We fell quite a bit in 2016, and then we stabilized for a while, and now we've fallen off about 7% between 18 and 19. Okay? So some effects to the land market. Now, whenever I go out and talk about land values, I have to say that land markets are local, right? And I'm talking about Kansas level farm income numbers and Kansas level land values. And so when we go into individual markets where maybe we've had strong yields for the last 3 years, or you've got a lot of non-ag influences on land values. Maybe you've got hunting pressure, on pasture values or something like that. It can be different, but these just show an overall trend for the state. So down 7% for non-irrigated land between 18 and 19, and on pasture, pretty much stable, a 1% decline. I'm just going to call it stable. So that's what I get out of those numbers. And I like having these numbers to work with because they're actual market transactions. And surveys are helpful, especially when we can't observe market transactions, but it's nice to have the comparison. So I think USDA had us down 3%. Between 19 and 20, the timing doesn't quite overlap, but I have us down a little bit more than that. Okay, what about 2020? So I very rarely put raw data summary statistics up. How am I doing for time?
You're fine.
Okay, but I wanted to put them up here because I wanted you to see that in the raw data where I don't run it through an estimating model, average land value has certainly fallen off, but it's the first 2 quarters of 2020. I can't run a model on half a year. So instead, I just put this up here. A slight decline, I would call it stable. Okay, so how many of you have been to an in-person auction in the last 6 months? Raise your hand. Okay, how many other people were there?
Quite a few.
That's good. And you were a quitter, right? How about you? How many people were there?
It depends if you were COVID or after.
I mean after COVID.
It's still a lot.
Still a lot of people, okay.
There's not a lot of things happening, so if there's a land sale, you gotta pay taxes.
Yeah, there's, what else are you
And
gonna
there's
do?
donuts. I mean,
And free donuts, and there's nothing else to do, right? Yeah, I get that. My husband went hunting in Wyoming, and he went to the same place that he went to last year. And last year there was nobody there, and this year there were 12 different hunting camps set up on the stretch that he was in. Nothing else to do, everybody's going hunting. That really irritated him. When I talk to auctioneers, one of the things that they've said is, well, some of these in-person auctions are either not happening, they're either being canceled, or they aren't necessarily getting as many people as they want to. And I think it depends on what part of the state you're in. But online auctions have also picked up quite a bit, and they're getting a lot of bidders from out of state. You can disagree with me or agree, okay. I talked to one of your competitors. He had bidders from Georgia, Wisconsin, Colorado, Nebraska, Oklahoma, Missouri, all for one piece of ground. If we think about going back to that chart where we spread out the profitability and looked at the histogram, so it wasn't just the averages, but the spread, I'd say we've probably got 25% of the farmers that are still in a position to buy land. But they're gonna be conservative about it. They're going to look at land and say, does this fit my operation? Is it a good quality piece of ground to buy? And they're still gonna be in the market, right? But there's a lot of other folks who 6, 7, 8 years ago might have been in the market who aren't today. But it's not so thin that the bottom has fallen out. We've still got money. And you know, the comment about people hoarding cash, you want to stay liquid, definitely. But when that just right piece of ground comes along, you also want to be in a position to be able to say, I can bid on it. So I think that there's some people that are doing that. Let's get back to that question that was asked earlier about what land values have done over the last 100 years. This chart only goes back to 1960. The blue line is Iowa, the red line is Kansas. How many of you, your families, several generations back, came overland, right? And you should have stopped in Iowa? Right. But we didn't, we came on to Kansas. Now, this looks a little better if I put Kansas on its own axis. Same pattern. Kansas, Iowa, I mean, granted, they are a level above us in terms of dollar per acre, but the shape of that curve is the same. Agriculture is what's driving it. You tell me, if you're going to predict out even just the next 10 years, this is the bubble from the 1970s and 80s. This is the run up in the 70s and the fallback and subsequent fallback in the 80s. And then we went on a sort of low and slow rate of growth, and then we really started to pick up in the early 2000s, and then it went crazy starting in about 2008. Are those sustainable land values? What happens with the election? So I'm going to ask the question of you before you ask it of me. What happens with this election? If Trump wins, does he continue to have the incentive to give farmers money? If Biden wins, I read this morning, his take is to bring back the Conservation Stewardship Program, which is a working lands program. So it's a way of paying farmers for certain environmental amenities that they do on their farm. But I don't see him going to ad hoc government payments. There's gonna be a lot of pressure from farm groups. I'm not gonna speculate, but I'm just saying we've had 3 years of infusions of government money. And for those that are doing okay during this pandemic, and there are some farms that are doing okay, that's allowing them to shore up their cash reserves. For other folks, it's just helping them meet the bills. But what happens in 2021? And do land values have room to come back down a little bit further and still be what I would say in line? If you draw a line on this growth rate right here, it comes out about here, not up here. So we could fall back and still be on an old stable growth rate as opposed to the inflated one that we're at. So I don't know. I keep making predictions and I keep being wrong. That's economists for you. We make weather people look good, right?
What about interest rates? 2008, interest rates.
Yep, so interest rates are gonna stay low until 2023. That will help. That will help. Brian mentioned that. We've had interest rates low for several years now. I don't talk about them as much because as long as they stay low, they're supporting the land market. But I think it's income that is driving whether or not we're going up or down.
What about the stock market? People not knowing what's gonna happen with it, and at some point maybe some of that money
Okay.
out of the stock market into land. We're seeing a little bit of that.
Yeah. So the question was uncertainty in the stock market, maybe people pulling their money out of the stock market and putting it back into land. From a diversification of your portfolio strategy, that's something that I think is going to be attractive to some people. I don't see it happening on a large scale like it did in 2008 to 2014 when profitability was so good in the market that everybody wanted in on it. Profitability is not there, so the returns, we looked at the rent to value ratios, those are not very high. The stock market doesn't have to do very good to beat, doesn't have to be that good, it still can beat it. So I think there's but you have to ask yourself, where's a safe place to put my money right now? Well, you can put your money in a CD and you will get a nice Christmas card from the bank. And that's about it, right? So land is always a good investment for farmers. It's the question, I think, is also the non-farmers, and whether or not they want to participate in that. And I think there's been a little bit of a cooling. So whether or not that turns around is a little bit uncertain to me. Other questions or comments? You want to say something?
Just back to the point about the online options is hands down, it's been a change. We started streaming with the online side of it a couple years back on all land options, and the outcome is strong. And it's kind of created a little bit of a leveling of the playing field. It's not just local; it's much more regional and national in a lot of cases.
It changes the dynamic because we have always sort of depended on land markets being very local. And if you bring in out-of-state bidders, it does changes the dynamic. So, all right, well, thank you. Thank you very much. I don't know if I've got anything else to say. Oh, I already talked about all this. We've got some online land values. You guys have the book, right? Did you get the book? Yes? Okay. We're in our second year of putting that out with the Kansas Farm Managers and Rural Appraisers Association. So we will continue to work with them. Robin is going to put that out. I will stop here and thank you for engaging in questions. And Rich?
I've got one here,
Okay.
or a couple actually. Let me go back, sorry.
That's all right.
As a percentage, how do Kansas bankruptcies compare to the 80s or 90s? I expect there's fewer farmers in Kansas now.
There are fewer farmers, And the bankruptcies, like I said, in terms of total numbers, we're seeing what we saw around the 90s. So nowhere near what we saw in the 80s, but yes, there's fewer farmers. So, you are going to have perhaps a larger average farm size that's going to be reflected in those bankruptcies.
And we just had a comment and answer to one of your questions earlier. Trump has supported ad hoc payments to get reelected. Second term, he has no incentive to support farmers.
Yeah, I would tend to agree with that. So, okay. All right, folks. Well, thank you very much. I'm going to turn it over to Robin.